You are listening to The Vocal Technologist. Spoken tech for your ears.
Ever feel like the fintech world is just sprinting ahead and keeping up? Well, it's a workout in itself.
It really is. Things move so fast.
Yeah. So for you, our listener, we're trying to cut through some of that complexity today. Welcome to Founder Fridays, a bit of an exploration here on The Vocal Technologist. We're going to unpack some of the really big shifts redefining finance right now.
Sounds good.
Yeah, our mission really is just to make sense of the innovation reshaping how money moves, from the big IPO buzz to the quieter stuff like the infrastructure revolution and those digital banks making huge waves.
Okay, let's get into it. Where do we start?
Okay, let's unpack this. A prime example, I think, of a comeback story, Klarna.
Yes, Klarna.
The buy now, pay later giant. They're not just back. I mean, they're really flexing.
They are. The numbers are quite something.
Q2 revenue jumped, 20% to $823 million.
Solid.
And they clocked $29 million in adjusted operating profit. Plus, active users shot up 31% to 111 million.
Wow. And the delinquency rates?
Even better, down to a really tight 0.89%.
That's crucial for BNPL confidence.
Totally. And they're eyeing a U.S. IPO maybe as early as September and just locked in this massive $26 billion funding deal. I mean, what's really driving this turnaround?
Well, I think the significance here is how Klarna isn't just, recovering. They're strategically repositioning buy now, pay later.
Repositioning how?
As a mainstream, trustworthy payment rail. Their partnerships, think Walmart, Stripe, they don't just signal market confidence, they actually validate BNPL as an essential option now, not just some alternative.
Right. It forces the old guard to rethink things.
Exactly.
Wow.
Rethink consumer engagement, definitely.
Okay, and speaking of incredible growth,
Yeah.
you absolutely have to look at Nubank.
Oh, Nubank. Yeah, the scale there is astonishing.
Isn't it? They added 4.1 million customers in just Q2. That brings their total to, 122.7 million?
Just staggering numbers, especially for a challenger bank.
And the financials. Revenue surged 40% year over year to $3.7 billion. Net income climbed 42% to $637 million. But here's the kicker, right? Their monthly revenue per active customer, $12.20. And the cost to serve that customer,
The what?
a mere bigger 80 cents.
80 cents.
Right.
I mean, to put that in perspective, many legacy banks, they're battling costs maybe 5, even 10 times higher.
Wow.
And with just a fraction of Nubank's digital agility, it makes Nubank a true, almost an anomaly.
Yeah.
It just shows how these digital-first banks, especially in big markets like Brazil, can get amazing scale and profitability.
So it's a kind of blueprint for founders.
Absolutely. Combine that low cost to serve with high customer engagement, expand your products, investments, credit, even crypto.
Yeah.
It's like they found the cheat code for banking growth, honestly.
It really feels like it. But for these digital dynamos to scale like that, they rely on, and sometimes they even build a totally new kind of financial infrastructure.
That's a crucial point.
Yeah, and that brings us to this fascinating parallel people are drawing. What some are calling the AWS moment for money.
The AWS analogy.
Okay.
Interesting.
Right. We're seeing companies like Circle, maybe Stripe too, building their own hyperscale infrastructure just for payments, like AWS did for cloud computing.
And Stripe's even working on its own blockchain, right? Tempo.
Exactly. An Ethereum-compatible blockchain, Tempo, designed specifically for payments and stablecoin commerce.
So this is fundamental, a real re-architecture happening.
Yeah.
Which, raises the question, are the legacy players keeping up? You look at Adyen's recent earnings miss.
Oof, yeah. That stock plunge.
Right, a lowered guidance, a 17% stock drop. It suggests some traditional payment firms are finding this new landscape, less of a sprint and more of a tech marathon they weren't really ready for.
Meanwhile, the newer players.
Exactly. Newer innovations like Lava Payments, Fiscal AI, they're thriving because they're focused purely on this embedded payment space. Speed, specialized infrastructure, that's what matters now.
And it's not just the brand new players, right? Even the established tech giants are adapting. Google Finance just got a big refresh.
Oh yeah, what are they at?
AI-powered answers, advanced charting. Users can ask really detailed financial questions now.
Okay, so AI integration for complex queries. That's definitely a game changer.
It feels like it.
Yeah, and this convergence, AI and blockchain weaving into core financial services, from Google's platform to Stripe's Tempo. It really signals a fundamental rethinking of the whole infrastructure. Founders aren't just building services on top anymore. They're building the foundational tech underneath. It touches everything.
So wrapping this up, What does this all actually mean for you, the listener?
Well, it's clear the financial landscape is in this massive transformation.
Yeah, driven by these innovative founders, cutting-edge tech. It affects how you pay, how you invest, maybe even how you save for retirement with things like crypto and 401ks popping up. Change is definitely here, and it's fast.
Absolutely. And I think what our exploration shows today is that often the most impactful shifts, they're happening kind of beneath the surface.
Changing the rails.
Exactly. Changing the very rails of our financial system.
Yeah.
Understanding that underlying infrastructure, that's key to navigating what's next.
And spotting the opportunities.
Yeah.
Okay. So for our provocative thought today, if payments really are becoming the AWS moment for money, what other industries out there are just ripe for a similar foundational overhaul, led by a new generation of bold founders?
That's a good one.
Something for you to chew on. Until next time, keep exploring.
Spoken Tech, for your ears.